Aloha and welcome and Happy New Year as we start off the year with the COVID Business Assistance Series. This is the first one for the year and the sixth of the series as we're looking at the updates to the Paycheck Protection Program and also the Economic Injury Disaster Loan. My name is Annette Lynch and with Maui Economic Development Board, the presenters of this series. And I'm just going to take you through a little bit of housekeeping. So if you can't hear me, read the slides, click the center of the screen for your sound. You'll also want to note that on the right side of the browser, you've got a couple of tabs. If you can't see it, there's a chat bubble at the bottom right. Click on that and up will come up the opportunities for you to chat. There's also a Q&A tab. Use that tab to post any questions you have for the guest speakers. And then we also have polls. And I ask you to participate just so we know a little bit more about you. One would have popped up as you came in, which was looking at what kind of business you are. We also want to see where are you located? One of the islands of Maui County, are you here? Or are you in one of the neighbor islands or outside of Hawaii? And so answer that one quickly. And I also want to know whether you've already received a PPP or EIDL, and where you're at, whether you've received one or both. So I'm just going to have a look at those as they come in. Please participate with those. Getting a few responses. High percentage are on Maui Island. We've got one from Lanai so far, two from Molokai, and we have several from other neighbor islands. So welcome everybody. Keep filling those in as we go along. We have a lot to cover, so I'm going to move on and I'm going to keep an eye on those polls. In the Q&A, have a look at the questions that are coming there, and if you see ones that's the question you want to be asked, vote it up rather than asking it again. And we're going to be taking questions from the top, so that'll increase chances that we ask that question here live. And this webcast is being recorded and will be available at our MauiBizAssist.com. We'll be sending you links after this call as well. And the slide deck will be available as a handout right at the very end. So make sure you stick around for that and we'll make sure you have access to that. All right, without further ado, I'm going to pass it on to our speakers, Frank Rego Jr., Director of Business Development Projects for MEDB, and Wong from the Small Business Development Center here on Maui. And I'm going to pass it on to Frank.
Next slide. Mahalo, Annette. Let's get to it. This is our agenda for today. By the way, Wayne, your picture looks a lot better than mine. So, so here we are. This is what we're going to cover today. We're going to do PPP update highlights in the background. We're going to get to the core of the program in terms of eligibility, how to apply, most importantly, doing your calculations, how the funds should be used, what forgiveness is all about, and how that's calculated. And then finally, but not least, we're going to ask about, we're going to tell you a little bit about changes in the Economic Injury Disaster Loan Program's advance. And we're also going to take questions at the end. So next slide. So this is our updates. This is the third round of the Paycheck Protection Program. Of course, it's obvious Congress and the administration reauthorized $284 billion in PPP forgivable loans. And look at the date there, until 3/31/21, March 31st, 21. So all of you, as we're going through this webinar, start thinking about the kinds of information that you're going to need to put together to move on this quickly in order to apply. So I'm going to ask Wayne now to kind of go through quickly sort of the rest of the highlights and key updates for the PPP, and because we'll be covering a lot of this also throughout the presentation. Wayne?
Sure. Well, thanks, Frank. So the December 27th, 2020 Economic Aid to Hard-Hit Small Businesses and Nonprofits and Venues Act, that we're now going to call the Economic Aid Act, is the follow-on to what used to be the CARES Act, right? And so this page really does summarize all the changes that have happened between what we used to know for PPP and what we know now. And quite frankly, all that's happened is sort of some expanded access and expanded eligibility. So PPP pretty much is based on the way it was previously, and it works the way it used to, with the major change being that people who got the PPP the first time and then now used up all that money, if you meet certain more criteria, you can actually get another round or another bite at the apple. So here's the changes. The covered period, which is the period that you have to spend the money, is now anywhere between 8 and 24 weeks, whichever is best to meet your needs. So it's not 8 weeks, it's not 24 weeks, it's any covered period between 8 and 24 weeks. The other big change, which is really nice, except that remember PPP is payroll retention, so the emphasis is there. But if you meet your 60%, the additional expenditures that you are now able to do have been expanded, and those are for operations, property damage costs, supplier costs, and worker protection expenditures. And we'll go into this in more detail later. And as we said, eligibility has been expanded to include a number of more 501c organizations, C6s, C16s, C19s, and this time around, the calculations and everything are provide much more flexibility for the businesses that had seasonal employees, because it was really hard if you didn't have employees that operated all the time previously. And then, as we said, the big news is that the long-awaiting second draw on PPP is now here, but there are a couple eligibility requirements that you have to carry on, and we'll go into that in more detail. And then the other nice thing about it is not the program itself so much, but the tax treatment has been finally clarified, so that when you get PPP, and if you get it forgiven, that became a grant, which generally in federal tax rules was taxable. It's now clarified that both as a loan and when it's forgiven and becomes a grant, it is not going to be federally taxable. State-wise, we still are waiting to hear whether or not the state is going to follow the same rules. But the chances are great that generally in Hawaii, we do just follow whatever the federal guidance is. It's just that our legislature has to explicitly ratify that. So we're waiting on that. The other big tax ramification is that due to the concept of double dipping, if you paid for expenses that are normally deductible, tax deductible, but if you paid it with government funds, you couldn't take it as a deduction. And now that's been clarified that no, that's now, if it's a deductible expense, regardless of how you paid it, it'll remain a deductible expense. So that's really nice. Next slide.
Next slide. So yes, this is the SBAPP background. Of course, we already know there's $284 billion in PPP forgivable loans. And as Wayne has said, this program is specifically designed to provide job retention through payroll costs, okay, and some limited other expenses. And depending on how you spend the money, there are going to be forgiveness or no forgiveness based on the percentages, making those 60-40 percentages. And loans are intended to cover 8 to 24 weeks of payroll. Now, Wayne, if you could go on and explain some of the dates here, because there's been a lot of confusion of when these portals were opening and when you can apply and how you can apply. And then also go over a little bit about the expansion on the operating expenses that are eligible in the program.
Yeah, so basically the previous slide was, what's new? And so those are the things that are new. So now if we back up and we look at the PPP just in general, this is just a reminder of what were the aspects of the PPP loan. And so Frank went through a bunch of that. But what's interesting is the application dates. So when it was first passed, initially they said that they were going to open up the applications on January 11th. January 11th came and went, and people still weren't prepared, people meaning the lenders. So then they said January 13th. That's yesterday, and people were still not ready. So then they said this Friday, and then they said, and this Friday we'll have at least the small banks be able to do it, but the actual now official date is January 19th, which is next Monday. So basically next Monday is the opening date. But as we indicated, get all your stuff ready now, because just like the last time, there's going to be a lot of people applying for this. And secondarily, the time period to apply is only basically mid-January to end of March.
Yeah. And the 19th is actually Tuesday, Wayne. It's 18 is Martin Luther King Day, which is a holiday. So I think the government's taking a holiday and not accepting applications. So
okay. And then the only thing that I'll say right now about the operating expenses, because we'll get into the actual details, is that previously only mortgage interest, rent, and utility costs were the other non-payroll expenses that you could spend PPP money on. And with this new round of money, they've added, these 4 new categories. Again, operation expenditures, which is really expanded, includes a lot of software that you can now pay with PPP funds, and then property damage due to public disturbances, supplier costs, and then worker protection. So PPE, and then any facilities manipulation you had to do to protect your workers. Next slide.
Okay, the next 2 slides are very important. So I'm going to ask you, Wayne, just to go through both these slides in succession, okay? Because a lot of it has to do with the calculations involved, and I'll jump in if I have anything to add. But could you first explain what the difference is between, and it should be somewhat obvious, but explain what does first draw mean and second draw mean, and how those things are going to be different as you're going through these slides. Okay, thanks, Wayne.
Sure. So first draw means that you never received a PPP loan in the other rounds, right? You may have gotten a partial. That's still considered getting a PPP loan. It doesn't matter whether you were turned down or you didn't apply or you withdrew. If you did not receive PPP money, you are now able to apply for a first draw this time around. And basically, again, the application process is almost exactly identical, right? It's coming up and documenting what your payroll costs are, and then it's a multiplication of that payroll cost averaged out for a month times 2.5. The interesting thing that was changed this time around is they have a lot more leeway because, we are now in 2021, right? So the first time this happened, you had to calculate your average monthly payroll costs for 2019, right? This time around, they're saying, you know what? If you did that before, we can go ahead and use that again. That's not a problem. Or for a little more flexibility, give me the monthly average payroll cost for 2020. And again, the decision for you is really going to be which one comes up with a bigger number, right?
Right.
And then they said, and you know what? If even all of those are a little bit tough, whenever you put in your application that month, you can go back to the previous year, which is 2020, and instead of getting the whole year dividing by 12, we'll just do that month, right? And so this is a case where if you had a really bad January, February, or March in 2020, and so or put it together, if you had a really good January, February, or March payroll, that's the choice you want to take, because you know, basically what's happening is that they're just giving you a lot of different ways to figure out which of the average payrolls works best for you, but the actual application is exactly the same. There's just going to be one block that says what year and what is the average monthly payroll, multiply by 2.5, and there is your loan amount. So you don't get to pick a loan amount. You have to show the loan amount will always be calculated for you based on a average payroll cost, right? The other change is that they used to allow up to $10 million. Now it's a maximum of $2 million. Interest rate stays the same for the portion that doesn't get forgiven. Still 1%, still a 5-year payback. And then the first payment, they used to say it was deferred for a year from when you got the money, but more accurately, it's really at some point you have to put in an application for forgiveness or not. And when you get a determination that, you know what, this amount is forgiven and this much is left over, or you get nothing forgiven and this much is left over, as soon as they know what that loan amount is, or what we call the forgiveness determination, then your next month is when your first payment is due. And then it still remains exactly the same. No cost to apply, there's no fees, and that the way you apply is through an approved SBA lender.
Go ahead, Wayne. Keep on going.
Okay.
You're going.
So that was first draw, meaning you weren't able to get it in any previous iterations. Second draw is, here's the criteria. You have to have previously received a first draw PPP loan, and you will have to have spent the money or demonstrate a plan to spend the money, right? So they're not saying you have to have forgiveness or not forgiveness yet. What they're just saying is that you can show you've spent the money, or you can show a plan to spend the full amount of the first one. So they're just making sure that if you got a PPP loan previously, that is now used up, right? So that's the first criteria. Second criteria is that first draw is really up to 500 employees, or whatever the SBA criteria is for your industry small business, right? Second draw, no matter what, you cannot have more than 300 employees. And then the third criteria is that you demonstrate at least a 25% reduction in receipts between comparable quarters of 2019 and 2020. So this is interesting. You get to pick which quarter is more beneficial to you, right? So you may have had some good quarters, some bad quarters, but if you need to demonstrate that at least one of the quarters in 2019 to 2020 to that comparable quarter, you can demonstrate a 25% reduction in gross receipts. And those are now the criteria for the second draw PPP.
Okay, Wayne, you're talking about quarters. There are a lot of maybe some seasonal companies here that aren't in operation completely during the full year, maybe not. How do they deal with seasonal work?
So in the seasonal work, I mean, they're saying that this criteria will cover them because they need to show at least one quarter where they fully are engaged. And unfortunately, the number of quarters they get to choose from are only the ones when they were operating, right?
Right. Okay, good. Thank you. So we, I think we're still back on the other slide, the 2.5. Yeah, there we go. So,
yeah, so this is not criteria, but it is good to note that there is, everybody gets a calculation of 2.5 times the average monthly payroll cost. However, NAICS Code 72, which is the hotel and hospitality industry, and then it's not on here, but also NAICS Code 51, which happens to be news organizations. They actually get a little boost in that they're going to actually get a PPP loan that's 3.5 times instead of 2.5 times. So it's not a criteria. It's like a little extra boost for those two industries.
Which is actually a boon for our economy and our businesses, because a lot of our businesses, especially in Maui County, actually fall into that NAICS code 72, especially since we're a tourist economy. So
yeah, so you have a little tour company, you will fall under that, and
fall into that
3.5 times your average monthly payroll instead of what used to be just 2.5 times.
Times. Exactly. So that's good for us in a lot of ways. Okay, next slide. Okay, so the SBA has PPP eligibility requirements, and one of the biggest ones that you have to be an officially registered business operating legally according to state and federal law as of February 15th, 2020. Okay, that becomes sort of a benchmark looking backward as well as looking forward. But Wayne, can you go into a little bit more about who are the eligible businesses and also individuals involved in this? Because it's been expanded a bit, hasn't it?
It has been expanded. And really, the third bullet here starts talking about the expanded businesses involved. And so, you know, carry over from before, if you're an independent contractor or eligible self-employed individual or sole proprietor, you still are able to get PPP. And they name these because quite often, you know, there was a lot of confusion because this is to retain employees, and many of these super small companies did not have an employee. But the good news is you were able to count yourself as one employee, right? And then they added quite a few of the 501c IRS definition nonprofits. So last time they had 501c3, which is a educational nonprofit. That still is good, but now they added some eligible C6s. So like some like chambers of commerce, C6s. And then they added C19, which are veteran organizations, tribal business concerns. And then there were some C16s, which are like some of the cooperatives, housing cooperative, electric cooperative. And then they added a lot more leeway on businesses that were NAICS code 51, which again are the news organizations.
Okay, there are some limitations on the destination marketing organizations and the C6s, especially in terms of their receipts and also type of work they do. I think there's a limitation that on your receipts, especially for the C6s, that only 50% of the money that you receive has to be attached to any lobbying activities that you do. Or same for the destination marketing organizations, only 15% of your activities are supposed to be attached to lobbying. So majority of your businesses has to be working in destination marketing or in trying to work with your members in terms of improving business climate or whatever your organization does for your association. Because a 501(c)(3) is basically a business association, like chambers of commerce. So go ahead, Wayne. Sorry.
Yep. And then again, just like the last time, there are slightly different and more liberal rules for NAICS code 72, which is again the hospitality industry. Okay.
Next slide. So this is the all important, how do I apply? And I got a thing about paper forms. I know this is all going to happen online and Wayne will go through this, but I think it's very important that when you're getting all your information together is to use the paper forms as a vehicle to get all your information down. Because once you get online, you just don't want to be grabbing stuff and trying to figure it out on the fly. Get all your ducks in the water so you can just easily go online for your lender or and start filling in that information. But that's what I think is the best practice in terms of getting all your information together. But go ahead, Wayne, and describe some of the forms involved for the first and second draw.
Yeah, so the 2483, which is the first draw application, is really the same application form that happened previously. There's a few little updates. Some of the certifications have changed and so on and so forth, but it's essentially the same. The new form, which is 2483-SD, is the new form for second draw. And so you'll see, and it's actually much more simple than 2483. Again, we're providing these references so that you can see what you're going to be asked for. All the lenders are going to want to get you to enter that online on their respective portals. Nobody's going to want to take paper and then they have to data enter it in, because when they submit the loans to the SBA, it has to be all online. So so the only reason we're providing these is so that you can get sort of a sneak peek on what the questions are going to be. But just realize that when you actually make your application, each lender will have their own proprietary online portal and will ask you those questions that way.
Yeah, the paper forms are just a good way of getting prepared and getting all your information in one place. Yep. Okay, next slide.
So again, we're just continuing on about, you know, how to apply. So yeah, you go to an SBA approved lender, and we're going to show you a list of those. And then this screen is really showing you that, remember I said that in the application, in a sense, the only number you have to come up with is the monthly average payroll that's going to get multiplied. So along with that number, you have to provide documentation to justify that number. And so depending on the kind of business you are, you know, it may mean giving your tax return. So like, for instance, if you're a sole proprietor, you know, your only sense of what you as the owner got for compensation is going to be your Schedule C. So that's what we mean about tax returns. If you do have a for real many employee payroll, you do have to submit quarterly 941s that to the IRS to show income as well as withholdings and things like that. So that is a key document if you have a lot of employees. And so these are just really a list of the kinds of paperwork you would submit to justify that one number that they're asking for, which is your monthly average payroll. And you know, when you get down to near the bottom, you know, what's interesting is that if you use a payroll service or, you know, one of these hired HR groups, they actually know what the rules are, and they actually can provide you a report, so you don't have to dig out your 941s and things like that. So that's sort of a shortcut if in fact you use one of those services. But just the point here is you do have to supply actual documentation for that monthly payroll number that you came up with.
Okay, and then you're also going to need your legal company formation documents showing that you actually own the business or a part of the business. If you're a partner, certification that all employees live within the United States, and that also that COVID-19 has negatively impacted your business. So this is pretty much all the information you're going to need and have to hang on to, okay, in order to apply for the PPP. Next slide. Now this list is the SBA lenders accepting PPP loans applications for Hawaii that the SBA has contacted and gotten responses from. Now, down on the bottom, Wayne told me that this is a list of all Hawaii lenders that are participating with the SBA. But if you look at this, each one of them has whether or not they're serving existing customers, new customers, and what their requirements are. Okay. Wayne, you got any comments on this list?
Yeah, so basically the summary of what you just said is that if you read guidance, and you know, they'll always tell you, go to the SBA website and you can get a list of SBA approved lenders. And that's what that link is down there. The problem is not all of them have chosen to participate in the PPP program. And even if they are doing it, they, as you see here, they will do second draw, but not first draw, or they will do both, or they will do neither. And then some of the bigger banks, especially like First Hawaiian Bank, and interestingly, even a small bank like Hawaii National Bank, there is an existing customer priority, meaning that if they got time, they'll talk to somebody who's not a customer. Otherwise, they really prefer to only help their preferred customers. So the list that you see here with the blue, the table, these are lenders that our local SBA office has actually contacted, and they're telling us exactly what they're going to do. The list on the link is all the lenders, no matter what, that have been approved to work and lend for the SBA. So there, as you can see, there's going to be quite a big difference between the two lists. The last comment I want to make is that you're sort of finding this stuff out at the same time the banks are finding this stuff out. So this vetting is SBA talking to management. Management may not have even told the branches yet. So if you go to a branch of one of these and you ask them and they come back and say, you know what, we don't know anything, and in fact we probably are not going to participate, ask them to find out from their management, because the problem is this is so new. So that's why we try to provide this table, because it should give you some confidence of the people that are and are not participating.
Yeah, the other thing, Wayne, is if a lot of people here have gone on a fintech like PayPal or SquareUp or Fundera to do this, they may have to find another lender, because it appears some of the fintechs are actually getting out of the business of doing these PPP loans. So that's a possibility. But like you said, it's a fluid situation. A lot of them might change at some particular point. Okay, so let's move on to the next slide. Okay, Wayne, I'm going to ask you to do this, okay? Calculating eligible monthly payroll costs, what you should include, what you should not include. So if you could go down the list of, first of all, what to include as payroll expenses for calculating your loan amount.
So we're actually not going to go through this list.
Okay.
But we are providing it within the presentation and in the slide deck, so that you can actually look at this, right? Because these are, in a sense, the most asked questions, because payroll cost is more than compensation. That's why this list exists, really, right? So so rather than go through each one of these bullet points, which you probably won't remember, we're just providing this list so that you have some place that you can refer to.
Good. I guess we can move on. Okay, so here's another question about what PP loans may be used for within that 8 to 24 week covered period when you're spending the funds. Wayne?
Right, so we've all been talking about what goes into the calculation for application. Now that you get the money, how can you use the funds, and which things affect forgiveness and not forgiveness? So remember, there's only really two components to what is allowed for spending the money. And as we said before, the intent of Paycheck Protection Program is to protect the jobs of employees, right? So number one criteria is payroll costs, and it's meant so that you can retain your employees, because you now are going to get, in a sense, replacement salaries and that you can pay out. And as a general rule, 60% of the loan funds that you get has to go towards payroll costs if you want to see any kind of forgiveness. And these are sort of other fine points to that. And then if we go to the next one, which we'll talk about the other component, which is there are some select operating costs. And there's nothing that says it's not to exceed 40%, but we're putting that in there just so you get a sense of it, because because you have the other requirement, which is 60% for payroll, which kind of leaves you no more than 40% for these other costs. And the big news here is, and again, we won't necessarily go through all of these but we want to provide you with more explanations. So payment of interest of mortgage, rent, utilities, that's kind of old news. That's what was happening before. The new things that came out was operations expenditures. And if you look at it, it's a lot of stuff that you can now pay for. You know, business software, cloud computing services that facilitate business operations or service delivery, processing, payment, payroll, records, inventory. You know, it's a pretty broad category. Supplier costs, and these really help cover the fact that you had inventory that might have perished, or you need to stock up with inventory. So supplier costs are there. And then worker protection expenditures, which is a lot of it is protective equipment for your workers, but also facilities adaptive costs, right? And then any costs related to property damage or vandalism that's tied to public disturbances and was not already covered by insurance and compensation. So again, this is the second use of 2 steps in terms of how you can use your PPP money.
Yeah, and just the thing about the 60-40 split, that is going to have impact on your forgiveness, which we're getting to next. So if we can have the next slide. Okay, loan forgiveness is applied for at your originating lender when all the proceeds have been used for your payroll costs, as it says there, and other allowed expenses in that 8 to 24-week covered period. Could you talk a little bit about FTEs, full-time equivalents, and what happens if you don't retain all those FTEs during the time you applied for this loan at the beginning, and when it's dispersed, and when it ends?
Yeah, so essentially, you will start to see a reduction in the forgiveness amount, right? You know, the guidance basically says at least 60% of the money has to go to payroll costs, and you have to maintain your full-time equivalency of employees, or the easy way to look at it is your employee headcount. Now,
Right.
If your headcount decreases, if your payroll decreases by more than 25%, all of these things are legal. It's just going to reduce how much ends up being forgiven and leave you with a loan balance that you have to pay back.
Right. I think the SBA has a kind of an excellent example of that. If you have a $100K loan amount and you only use 54% of that for for payroll, they're going to reduce proportionally that amount. So that's $54,000 out of $60,000, right? And then they're going to reduce proportionally, which is a 10% reduction, right? Okay, they take that 10%, they take it off the $40,000 that you would have used for expenses. So now you got $90,000 in potential forgivable space, whereas you got a $10,000 loan now. You keep reducing that percentage. If like reductio ad absurdo, you take it down to 0. Okay, you're basically paying for everything, right? At 1% per annum, because you can't say, and I think this is a common misconception. Well, I can, even though I didn't spend all this for payroll, I can pay for that, but then I still spent this on eligible expenses. That's not the way it works. Okay, as you reduce payroll, it also reduces the amount that's used for forgiven for eligible expenses. So it's a step-by-step process.
And then just a quick note that in this act, they finally passed a simplification for application of forgiveness, basically saying that for a $150,000 loan or less, all that's required to apply for forgiveness is a 1-page form that is essentially an affidavit and certification that you spent the money correctly. No documentation required. The one caution we want to tell you is that, you know, before this came out, there was this rumor, and everybody was like waiting for that to come down, that 150,000 was going to be blanket forgiveness, right? This is not blanket forgiveness. This is basically paperwork reduction, simplification for application. You still are required to have spent the money correctly, and you're going to certify to that. And it comes with a warning that you are to retain your documentation records, even though you never turn it in. You are to retain it for 3 years and have it available for inspection by the SBA. And by the way, what's interesting is I think there is something like $50 million in this bill allocated to the SBA to do audits. So again, awesome. You just certify that you paid and used the money correctly, right? Within the right amount of time, at least 60% went to payroll, and you have documentation that shows that. To apply for forgiveness, you just submit a one-page form. Really great, but don't confuse that with, for anything 150,000 and less is automatically forgiven. Right?
Yes, the word's automatic. No
Right.
automatic forgiveness.
Right.
Yeah, perish that. That was a rumor and didn't show up in the legislation.
Right.
Exactly. So we're going to move on now to the economic injury disaster loan advance, and talk a little bit about how the Act has sort of updated that, and talk a little bit more about that particular program. So the next slide. Okay, so 20 billion was added to this program, with applications being accepted through December of 21. Wayne, would you go a little bit into how this works now? Because you're going to be able to retroactively, correct, get some of the money that you may not have gotten, because originally it was advertised as you're going to get $10,000, and then as they went along, you know, you got $1,000 per employee, and so it became sort of a very confusing mess for a lot of people, you know, assuming they were going to get this $10,000 advance in total. But there's a way, I think, to be able to recover this, correct?
For select people.
Okay, for select people.
So again, we're talking about the advanced program, not the full disaster loan program. Right? Nothing has changed in the loan portion, but the advanced portion, which ran out of money, which is why they started cutting back and everything, did get this injection of $20 billion. However, to go back to the well for that, look at bullet point number 2, which is this is only for business owners who have not already gotten the full $10,000.
Right.
And here's the main filter. Your business has to be located in a low income community. They are currently working on a way for people to figure out whether they are or not. It's part of the new economy low income mapping that they did for the country. Congress uses it all the time, but they don't have an easy way for a layperson to find that out. But supposedly by mid next week, they're going to come out with a tool. You put in your business address and it'll tell you whether you're in or out of the low income community. So that's the first giant filter. You have this only are for businesses in a low income address, right? And then the second thing is you have to have suffered an economic loss of greater than 30% between 2019 and then you sort of choose sort of the next period. And then this is only for the smallest businesses, which would be 300 employees or less.
Okay. So this is for working capital, correct?
So idle, advance, and loan funds, unlike PPP, which is targeted for job retention,
Right.
this is all operating expenses, which is way more flexible.
Okay, good. Well, thank you for that. This is non-taxable. That's very important. A lot of people were wondering whether or not a lot of these grants and things had to be added into their gross receipts or their gross income, and that's not true. Correct, Wayne?
Correct. So the rule of thumb has always been, if you get a loan that's not taxable income, if you get a grant that is taxable income, for instance, unemployment, that's taxable income, right?
Right.
So in this bill that was passed, they clarified that both PPP forgiveness and idle advances, which represent grants, are not going to be taxable. So you don't put it in. And then additionally, there's a concept that if you pay any expenses that normally would have been business deductible with government funds, you're no longer allowed to deduct them again, right? So kind of like double dipping. So they clarified that in this bill as well, which is, forget that, this is relief. So any deductible expenses that you paid with government funds that are idle or PPP still remain deductible expenses on your taxes.
Okay, so let's move on to the next slide. So Wayne, why don't you wind us up here in terms of answering the question, can I have both a PPP and a economic injury disaster loan at the same time? Which I think the answer to that is yes, isn't it?
The answer is yes. Both of the products have to be applied for. They have different eligibility and, in a sense, different targets for what they provide. There is nothing of getting one that affects the getting or the use of the other.
Yeah, and the interest rates are different. One's 1% and the other one's 3.75%, correct?
Correct, but that's because of the terms too, right? So 1% for 5 years, right? Amortized over 5 years, or 3.75 amortized over 30 years. So kind of like a right?
Yeah,
monthly.
I think
very different.
Yeah, no, very different. But also, I think the EIDL rate for nonprofits is 2.75%. So
correct.
Okay, so I think that's about it. Why don't we move on to the next slide? So what we're going to encourage you is what we've been saying from the beginning: get all your information together, apply now, consider in advance how you will comply, or whether you're consider in advance how you will comply. Consider in advance if you really feel this is going to be for you, right? And make sure the right people participate. We haven't mentioned much about partnerships, but Wayne, you may want to talk a little bit about partnerships, because they talk about 20% ownership, and there's a thing in the guidance about that if you got a partner, you guys all should be applying on the same PPP application and not separately.
Yeah, so we have multiple owners, right? And especially when the ownership of any respective owner is 20% or more, there was some problems where one owner would obligate the whole organization as the representative. And this time around, they're saying, yeah, one owner can make the application, but all owners who are 20% or more have to sign, so they acknowledge that they are aware and are taking on the responsibility. So no more one rogue owner doing something that the other owners don't see, right?
And last but not least, if you don't have one, get a relationship with your lender, right? I mean, it's important to have a relationship in the community with your banker. If you have other people like your CPA or a lawyer, make sure you have those relationships all set up. Here are some useful links. The SBA PPP website, the SBA EIDL website that you can refer to. And I think that's about, well, you can also go to www.medb.org. And Wayne, what's your website?
So we are hisbdc.org.
Okay. And you'll see that on the website where this will be, there's other organizations that you can also help. Okay, so we got Annette back because she's going to give us some questions that have come. We got a few minutes for questions here, about 10 minutes for questions. So thank you very much.
Thanks, Frank. Yeah, we've got a bunch of questions coming in, and I'm just going to start at ones that just came out at the very end about the EIDL, the advance. Is that entirely forgivable automatically?
Correct. In fact, you don't apply for forgiveness. It is a grant from day one.
Yeah.
Easy. Great. So this question is at the top and had a lot of votes. Is it true? And it was one that we got beforehand, so you'll identify with it and just see if there's any clarification about qualifying for the next PPP. You must have a 25% decrease in revenue. We talked about that. And it's just about clarifying about the quarters. Do they need to look at all the quarters of 2019 and compare to the same quarters of 2020? If any of those quarters in 2020 is 25% below the same quarter in 2019, they qualify. Is that correct?
They have to be comparable, yeah, but they have to be comparable.
Quarter, and you get to pick.
Okay, great. Someone's asking about what's included in revenue. Does the PPP loan number one include the grants included? I'm pretty sure not. Or do we just show quarterly total revenue compared to last year?
It is just operating revenue. It's gross operating revenue. So none of the grants or anything like that to skew the numbers.
Yeah. Just to clarify, comparable quarters means the second quarter of 19. You're comparing the second quarter of 2020 with the second quarter of 2019. That's what meant by comparable quarters. You can't do the third and the fourth, of each year. You have to do, the second quarter of 2019 with the second quarter of 2020.
Same quarter of each year.
Same quarter of each year.
And there have been a few questions about the FTE pay rates. And this one is, we have less employees than we did in 2019. What is the look back or comparison period for the second draw? Did we answer that in the presentation?
So none of that has changed, right? It's going to use the same forgiveness criteria. And so if you look back at some of the other how-to presentations that we put together, that doesn't change. Whether it's first draw or second draw, forgiveness rules are going to actually be exactly the same.
Mm-hmm. And it really is looking at the employees that you had in the in history. Some people are asking about, well, I'm about to take on an employee. You can't really factor that into your application or the loan. Is that correct?
No, if you have a quote, because that person would actually be a replacement for someone you lost, right? So it's not you have to have the same people. You have to have the same head count.
Head count, yes.
Okay. And so more specifically, we reopened, this is from Ismail, we reopened since 10/15 and we are experiencing a huge decline in business since last year. I have 50% staff from last year. Do I have to apply for our current payroll count or do I have to base it from last year? So just again, reiterating your point.
So are you talking about application or are you talking about forgiveness?
Application.
Right. So application, you actually get to choose, right? You can use 2019 numbers, you can use 2020 numbers, or you can use exactly 1 year from the month 1 year prior to your application date, which in a sense would be 2020. But it would only be for that month. You don't have to do the whole average of 2020. So if you applied before, or if you had put your numbers together before, and now you're looking at 2020 and it's very different, and you're applying for the first draw and even for the second draw, the criteria is much more expanded. You can utilize the 2019 numbers, which for most people were kind of devastating, or you can use the 2020 numbers, which for most people are really devastating from a income, but unfortunately that also means it was not that great from a payroll, right? So you might want to go all the way back to 2019 because that payroll looks pretty good, and that's how your loan amount is going to be based.
Yeah.
Thank you. So 2 related questions. Any restrictions on how we spend the PPP round 1 funds? So they received a PPP and that were still remaining after the 24-week coverage period. And to roll on to that, can anyone use any unused funds from the first PP be rolled over into the second PPP loan?
So you cannot roll anything over. In fact, the criteria to be able to apply for the second PPP loan is that you have spent all the first PPP money, or you can submit a plan that shows within the next few months how all that money would have been spent.
Okay. And and no restrictions on spending it other than being within the rules of payroll versus operating expenses for that first.
There are restrictions, about how you spend the expenses that we've went through, right? There's certain expenses you can and certain expenses you can't. But the important thing here, and Wayne always reminds us of this, is that this is a Paycheck Protection Program. So the emphasis is on retaining employees. So that's I'm
just reading into this question. It sort of says it's round 1 funds that were remaining after the 24-week coverage period. So is that the part that's rolled into the actual loan part versus the forgiveness?
Correct. So that would be a loan part, and what you would have to do, because you haven't spent it yet, and again, that's why we're saying you can't use the term roll over. Over into anything. What that means is if you did not get forgiven, quite often it's because you either didn't spend it correctly or you haven't spent it yet, right? Which means that you have to come up with a plan to show how that money is going to be utilized, because the criteria to get second draw is that you spent all of your first money, or they do give you a little leeway and say, or you submit a plan that shows how that money is going to be spent. So in essence, it's already been planned for spent. So they're not going to give you any PPP money if you haven't used up your first PPP.
Yeah. So we're assuming this person has not applied for forgiveness yet. That's what we're hearing, correct? From the first PP loan. So
I'm not quite sure. Yeah.
Yeah.
And remember, again, the criteria is having spent it, right? So even if you spent it wrong and you have to pay it back, you still meet the criteria, right? So second draw PPP does not touch anything about forgiveness or not forgiveness. It's
exactly.
Funds have been spent and it's gone, right? And that is one of the first qualifying things that allow you to draw for second draw.
Okay, I saw a few questions coming up about their particular NAICS, and it's just people will check the handout again for the, you specifically referenced the code 72. So then people say, well, what about my work code? What about my code? Pretty much it's the code 72 that and franchises that has the biggest leeway for the 3.5 times and some other things.
And news organizations, those are the only two things mentioned in the guidance as having special, like for instance, that 3.5 multiplier. Yeah.
And if you need to know what your NAICS code is. I mean, if you don't think you're in the hospitality industry or the news organization, you can go to NAICS.com, right? NAICS.com. And then there's a search thing in there. You can put in terms or you can drill down. So the NAICS code is 6 digits. The first 2 digits is your industry. And then the last 4 digits is broken into subsections of the industry. So that's why when they say NAICS code 72, that's all the hospitality terminology. And NAICS code 51 is all the news things. So if, like, for instance, if you're retail, I think you're like 42. If you're, you know, in the restaurant business, you fall under hospitality, you'd be 72,000 something, right? So again, NAICS code, your individual NAICS codes will be 6 digits, but the first 2 digits tells you what industry you're in. And that all can be found in NAICS.com or NAICS.com/search, and it'll take you to the search box.
So Wayne, earlier you mentioned tour operators. Would that be under 72?
That would be under 72.
Okay, conscious of time, and we will be following up with email answers so people will get their answers to their questions. One thing that came up several times was independent contractor, and I'm not sure if you covered it as much in this one as we did previously in our own talks, clarifying that companies cannot claim payroll for their independent contractor, but the independent contractor can. And someone asked about, does an independent contractor have to then apply to be a small business? So if you could just speak to that.
Sure. So actually, by law, an independent contractor is supposed to be a business. Right?
Yeah.
If you're not a business and somebody's hiring you, you are an employee, and they should be taking out withholding and all of that other stuff, right? So, and in fact, the state of Washington and the federal government, if you ever get audited, they will look at the people that work for you, and basically, if they say they are an independent contractor, they'll want to see that they have a business license, which makes you a small business. So, so the people that don't have a license, they're working and they don't get a W-4, they get a 1099. That's not exactly legal. That's not to say it doesn't happen frequently. It does happen frequently, but you know, that's, and again, if you're doing everything right, even if you didn't register as a business, if you did your taxes correctly, which means that you as the independent, you know, you don't get it, you get a 1099, and you claim your taxes, your federal and state taxes, on Schedule C of your personal return. Schedule C basically says, yeah, my registrations may not be up to snuff, but I am dealing with my income and my taxing and everything in the correct way for a business. Because when you apply for PPP, and remember, we're looking for that monthly average salary, for an independent person who works for themselves, whatever label they want to use, they basically would be using as their document Schedule C. And line 31 of Schedule C is the gross amount of income for yourself for a particular year. And so the calculation for PPP is line 31 Schedule C divided by 12. That's an average monthly, and multiplied by 2.5 is your loan. So the confusion really comes if you're talking about yourself and you want to call yourself an independent contractor, then that's not a problem. You are a self-employed person, which is also known as independent contractor. If you are an employer and you're trying to do head counts and things like that, anybody that's an independent contractor to you are not covered by this. You cannot include them in your counts. So hope that.
Adding to that, sorry, it just popped up into here, was someone saying, I have 2 employees and 2 owners on draws.
I just want to just add one thing. In our presentation today for the PPP eligibility, it says officially registered small businesses operating legally under federal and state laws. So there you have it, as of February 15th, 2020. Go ahead.
Thanks. And so two owners on draws. I get, they need to count themselves as employees, correct? So they're asking about mixing payroll and draws. If I'm not quite sure what that means, so hopefully you do.
Yeah. So basically, what they're saying is, as an owner, I'm not actually on the payroll. I have employees, but by the way, I also pay myself, right? So yes, you are able to count yourself as one more in the head count, and the way you calculate what you get on a monthly basis is taking the annual number on your Schedule C. So each of the owners that's taking a draw, they are supposed to have reported that on Schedule C on their respective Schedule Cs on 1040. So each of those would count as an employee, and the payroll that you would be looking at is line 31 divided by 12, right? And so you start to aggregate all that. So yes, owners that are taking draws and not in a normal payroll still can count themselves along with their normal employees. Yep.
Just as long as it's not over 100,000.
Correct. Right. And that applies for owners as well as any other employee. $100,000 annualized is really the maximum that you can record.
Exactly.
Okay, I'm mindful of all of our times, and so much appreciate Wayne, particularly coming and joining us as MEDB as a host of this show, of this webcast, and it's obviously well needed with all the questions that have been coming along. I'm going to make sure, I'm just going to share the handout that's going to be sent out to everybody, so you can download that, and I'll also be putting up on our website at mauibizassist.com. It's on our MEDB website. And there are also some links in there for you to contact us if you need further help and assistance. And obviously your lender will also be of assistance with being able to finalize all the forms. A few people are asking, well, if they had the first PPP, will I need to put in forms again? I'm going to guess that pretty much is, you're going to have to do a complete new application for that second draw. And great.
So
and,
we'll answer questions if people have things in the chat room that they've asked that haven't been answered. We'll just forward that to us, and then we'll begin answering them. So we'll get back to people. So.
Yeah, and we'll pop them also on the website with the FAQ. So you can basically use that as a resource and see if that question, and we'll lump some together because there's some commonalities in those questions. But thank you so much. Over 200 people have joined here today, and we really appreciate your time and look forward to providing further resources for you. Mahalo.
Thanks, everyone.
Thanks, everyone. Oh, hui ho.